Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. Once again, it's been a week of ups and downs for gold. After starting the period in the 1925 to 1935 per ounce range, it spiked briefly to just above 1940 on Tuesday. The yellow metal was at around 1935 at the time of this recording. Market watchers have been eyeing the U.S. Federal Reserve, which released the minutes for its mid-March meeting on Wednesday. The Fed hiked rates by 25 basis points at that meeting, and the minutes indicate that future hikes could come in at 50 basis points. Higher rates are typically seen as negative for gold, but the precious metal is valued as an inflation hedge, and experts have suggested this is providing price support. Curbing inflation remains a top priority for the Fed, and the central bank has indicated it's moving toward reducing its $9 trillion bond stockpile. It will perhaps cut its holding by as much as $95 billion a month. Moving away from gold, I heard this week from Nuttall of Ninepoint Partners, who's quickly becoming a favorite on our channel. Eric runs two funds focused on oil and gas, and he has a bullish outlook on the sector in 2022 and beyond. This time around, Eric weighed in on what the war between Russia and Ukraine means for oil, reminding investors that the industry was already in a structural bull market before fighting broke out. In his opinion, the conflict has essentially hit fast forward on the oil narrative. What does that mean for prices? Eric expects the energy fuel to hit an inflation-adjusted all-time high in the next year. Here's how he explained it.
I was always told early, making a production give a price or a timeline, never both. So my forget the timeline. The prices, I think we have to go high enough to kill demand. And that's meaningfully higher than $120, $130 oil, unfortunately, because this is like, if we just stayed at 100 forever, like that's a very happy place for everybody, even 80, frankly, with stocks discounting 60. But I don't think we're going to get that wish. So I think within the next 1 year, we'll see all-time high oil prices.
Okay, perfect.
Inflation adjusted as well.
With Eric's comments in mind, we asked our Twitter followers this week where they see oil prices going in 2022. The poll was ongoing at the time this video was recorded, but most respondents said higher. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. We're going to wrap up with a quick note on battery metals. Prices for many of these crucial commodities have been on the rise both in 2022 and previously, and INN's Priscilla Barrera recently asked experts what that means for electric vehicle prices. Gavin Montgomery of Wood Mackenzie noted that with battery metals prices rising, EV battery packs will cost more in 2022 than they did last year, which reverses the downtrend seen over the last decade. This factor and other issues like inflation are pushing EV prices higher, but the expert said it's important to remember that EV makers and other consumers use long-term contracts to protect against price volatility. Aside from that, battery chemistry preferences can make a difference for companies. The upshot seems to be that while EV prices are indeed rising, this isn't going to kill the electrification story, especially as owners of non-EVs face higher prices at the pump. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. See you next time.